Welcome back to the channel. My name is Brad, and we're going to listen to ADS Analytics and our close-end fund weekly review. Hope you enjoy. Until next time, God bless.
CF Weekly Review: High Premiums Can Be Fragile. This article was written by ADS Analytics. Summary: we review the CF market valuation and performance through the third week of October and highlight recent market action. Discounts widened despite NAV strength across most CF sectors. MLPs and equity-linked sectors led in October. High-premium CFs exhibit higher volatility. Investor confidence and momentum play significant roles in price fluctuations. BlackRock's MUI tender offer at a 2% discount is attractive. Post-tender, the fund will convert to an unlisted CEF with periodic repurchases. We are ADS Analytics, a team of former researchers and trading at several global investment banks. We run the investing group Systematic Income, where we scour all market sectors in our search for attractive high-yield opportunities. Welcome to another installment of our CEF Market Weekly Review, where we discuss closed-end fund CEF market activity from both the bottom up, highlighting individual fund news and events, as well as the top-down, providing an overview of the broader market. We also try to provide some historical context, as well as the relevant themes that look to be driving markets or that investors ought to be mindful of. This update covers the period through the third week of October. Be sure to check out our other weekly updates covering the Business Development Company, BDC, as well as the preferreds baby bond markets for perspectives across the broader income space. Market action. Somewhat unusually, discounts were mostly wider this week despite NAV strength across the vast majority of CEF sectors. Month to date, most sectors are down, primarily due to the rise in Treasury yields. MLPs and equity-linked sectors remain in the lead in October. Discounts came off elevated levels. Fixed income CEF sectors continue to trade at historically rich levels. Market themes. There was a question on the service about recent volatility in the CLO CEF, EIC, which fell around 5%. Generally speaking, the higher the premium of a CEF, EIC is trading at a double-digit premium, the higher will be the volatility, all else equal. You see this particularly in something like GUT, which oscillates between premiums of 60 to 120% pretty regularly. The following chart plots the volatility of the fund against its premium. We see that the valuation of the fund and the volatility tend to trend together. Volatility tends to be higher when the premium is high and vice versa. High premium funds are in a kind of unstable equilibrium where they are not just vulnerable to distribution cuts, which inevitably lead to sharp premium drops, but also to investor confidence, which, for high premium CEFs, is not always based on fundamentals. Fundamental investors tend to like to buy at discounts, but rather on momentum. Investors who buy into a fund at a double-digit premium based on recent price gains can be easily scared off with a 5 to 10% drop, leading to further near-term volatility. This can create a negative feedback loop of price drops, leading to further price drops. In contrast, value-based investors, who are more attracted to discounted funds, will tend to step in once prices start to fall. This will not necessarily stop price declines, but it will tend to lessen volatility. Of course, at some point, even high-premium funds will become attractive to value investors, but that's likely after a large price fall. Market commentary. BlackRock will commence the tender offer of the Muni CEF MUI for a purchase of up to 50% of the fund's shares at a 2% discount versus 4.9% discount now. That's a pretty good deal, and it's worth oversubscribing. The fund will then convert to an unlisted CEF and will conduct periodic repurchases. Although the interval fund repurchases will be more attractive as they will likely be at the NAV, the 98% of NAV gets investors most of the way there with little waiting around. Interval funds typically buy back only a small number of shares annually. Stance and takeaways. Our overweight CEF sectors, municipals and preferreds, had a great run in the last 6 months or so, outperforming the broader sector on a discount basis. The discounts of both sectors are now in line with the broader CEF space. The recent backup in Treasury yields has boosted the yields of the underlying assets, extending their due-by date. We maintain holdings in funds like PFO, NZF, and NAD for the time being. This article was written by ADS Analytics.